This week we're going to be speaking to Kris Carpenter, who's a property developer from Leeds. We'll be hearing how he started out studying psychology, went into the army, left to become a pretty large property investor, building a big portfolio, and then really started getting much bigger shit done and transitioned into becoming a fully-fledged property developer. So before we get started, let's tell me, where did it all begin?
Well, very good question.
Tell me about you. How did you start? How did you get into property?
So I got into property in my 20s. I did a psychology degree, followed by a master's in psychology, and then joined the army.
Actually, do you know what? That's so interesting. You probably did tell me that in the past, but I've forgotten that first bit about the psychology.
Yeah, so I kind of was doing my master's and joined the army and did quite a difficult selection course. And in sort of quick succession, part of my cohort was mobilised to Iraq and Afghanistan. On that first tour, a lot of them were killed. Wow. So we had quite an interesting 20s, let's put it that way. So I went from student, sales job, army in quite quick succession to then thinking, probably don't want to be in the army much longer.
So how old? So you were in Iraq?
No, I never went. So okay. I got a job beforehand elsewhere in recruitment in the army, and so I very quickly was looking for an alternative career. So in a little joint venture with my sister when I was probably about 27, 28, we bought the worst house on the worst street in Leeds. And we renovated it ourselves over a summer, sort of a little flip.
So how old was you when you did that?
I think about 26, 27, something like that, 28, yeah. So sort of mid-2000s. And we rented it out, somehow made some money. And we were like, great, it worked. That wasn't too difficult. And then we sort of had, we'd run out of cash at that point because even a little house seems to cost all your money. So fast forward a year or two, and this is when I was looking to mobilise with the army. The financial crisis was hitting, so that was coming up to 2008. And so we were trying to build this small property business in the background whilst doing our day jobs. And in essence, the financial crisis hit. We had offers from mortgage finances on several properties that we were buying. And these were all repossessions, HMO type student stuff. And we just went round and chipped the price. Very quickly, that meant that we bought about 10 houses, which actually covered enough income to made enough income to replace one of our jobs. The irony was both me and my sister quit our day jobs at the same time and ended up in a bit of a pickle. And that led us on to forming an agency. So we quickly realised that we could turn this into a trading business. So we basically started sourcing property deals, renovating properties, built a letting agency. And it was a case of, make some money and then buy another property for ourselves. So we spent the next few years, in essence, building quite a large portfolio of properties in our own names, joint venture partners, raising funds externally. And it was all the sort of lower value inner city type stock. Got to about 2015, and my sister decided to get married, have kids, and that she never wanted to step foot in a buy-to-let house again. So we sort of parted companies. That also coincided with the Section 24 tax change, which really hit us in the nuts. I think it was probably getting on for about £6 million worth of property held in personal names in various joint ventures. So it was a real mess. And just a lot of stress.
So most people watching this will know what that means. But
yeah.
For those that don't, you just briefly.
Yeah. So basically, the tax rules changed on how rental income would be taxed, or the mortgage couldn't offset the cost of the interest basically as a tax deductible expense. So it meant for everyone who held their properties in their personal name, they couldn't really make a decent income off it. It was a lot harder. So in essence, it pushed you up your tax brackets. So I think, I was earning like a few £100,000 a year gross rental income, which is quite a lot to get taxed on.
Yeah. So tell me, so now I've got a view on what that's all about, but tell me, what do you think was behind those tax changes?
Well, I don't know. I guess I've not really thought too much about it. I think the government always see something working, people doing quite well, and then they decide to tax it. So recently they've done the same thing with the short-term stay lets, the SA unit type lets. I've got a double cab pickup truck, and they've decided that they need taxing more now, so they're not making them commercial. But so basically, as soon as there's a little wicked wheeze that people can do quite well from, the government seems to like to close that loophole. Well, that's my view on it. As soon as I think I've got a good idea, the government seems to be out to get me.
It does often seem that way, doesn't it? And at the same time, institutional build to rent booms and more dosh for BlackRock.
Yeah, I'm sure that had a lot to do with it as well. I mean, if you look at that and how that sector's taking off now, it's remarkable, isn't it?
And at the same time, the small investors are screwed. Yeah,
and a lot of people, a lot of the buy-to-let people have left the market or restructured their businesses, and that's fine. I've done the same. It was a case of selling. I think we had to sell 4 properties to raise, pay capital gains tax and to basically be able to buy one property back into the company. So I've done a whole load of restructuring, and it's been a real pain in the ass, if I'm honest, but that's life.
So anyway, tell me how this all sort of evolved into property development.
So sort of 2015, 16, 17, we were very competent at doing the sourcing of properties. We were probably sourcing, 3-4 a month at one point. I think the best month I did was probably 10. So it was a nice little business. Probably bought 250 houses now in Leeds for myself and clients, and so it was nice. But I always thought we could do a bit better and wanted more, so I started flipping properties. So I started buying the rundown bungalows, and could we add extensions to sort of larger properties, and could we flip them and make bigger returns? And so I flipped, I think we did about 7 properties, and all of them was, you'd add an extension, it was kitchens, bathrooms, make them nice. And I never made as much money on any of them as the spreadsheet said I should have done when I first started. So a 50 grand on the spreadsheet day one would probably materialise to 15 grand when you added it all up at the end. And that basically just led me to thinking, well, actually it's profitable. I prefer doing this type of work, i.e. the development rather than the lettings. So I'll just do bigger deals. And so I've just incrementally increased the deal size over the last few years.
Okay. And now how did that happen? What was the sort of process? Because I think for a lot of people, like for me, when I did a similar-ish thing like many years ago, and I just grew very, very, very slowly, really, into increasingly bigger things, But
I guess the 2 things that I've done quite well. One is being able to raise money externally, so I didn't have my own funds, but being able to raise enough funds, and then the other is to form joint ventures. So I raised £1 million cash from private investors, and I joint ventured with a construction company, and that led to my sort of first multi-million-pound development deal.
What was that?
So that was 20 apartments in Harrogate Town Centre, and it was a office conversion with a new build block in the car park. Super prime location, south facing.
So was that PD?
Yeah, well, it was part PD, part planning. So it was 2 blocks basically, and that, and fantastic scheme. Excellent in every way possible, apart from we got hit with COVID. So that came about as we, literally just starting on site. We got hit with the old COVID drama, and it turned out to be probably one of the most stressful headaches of my life for the sort of 12, 18 months as we battled to get that finished, and dealing with financing, refinancing, and sort of the sale of the units. But yeah,
So let's talk a bit about that, because one of the reasons for doing this is so people can understand just the type of problems that can come up and what an issue it is. Now, obviously, I've seen that site. It's a really nice site, but like lots of things, I think people from the outside that aren't in the industry, you know, they don't really know what goes on. They just see, you know, you build in a load of houses or a load of flats, and assume that it means you're making a load of money, and maybe it's not too difficult. So
yeah, so I mean, the problem with property development is you're making a decision based on numbers that are an estimate at best, and it's not until you come to sell that property, which can be 12, 18 months, 24 months later, does it come out in the wash what it is. And during a 2-year period, a lot can happen in the world. And invariably, it would appear as soon as I buy a site, a load of shit kicks off normally. So with this one, it was all looking really good. So it was a vacant office, super good location, Harrogate Town Centre. And yeah, we bought it unconditionally and then submitted the plans. To be fair, the planning was okay. Like all things, it took longer than expected. There was hustle and bustle, and the sort of case officer approved it on the last working day before Christmas, just to kind of clear his desk, where I'm sure he could have done it 4 weeks earlier, or if not a couple of months earlier. But you know, that was fine. And we negotiated a few points about trees and sort of materials and things like that. Where it got sort of, I guess that wasn't the smartest move in hindsight, because we had already owned the building for 6 months.
Sorry, what wasn't the smartest move?
Well, buying the building unconditionally.
Oh, right, okay.
Because
but just on that, now, could you have done it any other way?
Not that site, no. It was an unconditional sale only. And that's, you know, that's the way
Sometimes
it is.
That's just how it is.
Yeah, sometimes it's like, and you know, we'd lost out on a previous building, and we'd lost some money on that, and you know, we were mega keen and keen to get started.
It's worth mentioning, because one of the things I'm trying to do here is like, you know, there's people, we've got very super experienced people like watch and listen to this, and you know, relatively new people.
Yeah.
It's worth mentioning, one of the, I think, big problems in development is, you know, people end up getting a bit desperate, and they really want to do a deal, and very often, you know, it's easy to make a deal look like it works by, you know, tweaking a few numbers on the development appraisal. Very often people do deals that they actually shouldn't have done, you know?
Yeah. I'd completely agree with that. And I think it's really good to have your supply of opportunities flowing fully, knowing that if this one isn't right, there's another one just around the corner, and getting that set up. And it takes a lot of time sort of finding the sites and appraising them and seeing if they work and if they don't work. I think in this case, we'd have bought that site anyway. You know, for those that know Harrogate Town Centre, you know, this is overlooking the Stray. It's south facing. It's about as good a site. It's about as good a site as you're going to get. So I think we were happy with that, and understood that, you know, it taking I think it was probably 4 months before we got on site after we bought it. That was okay in this case, and because it was permitted development.
And just on that, so again for people, so what was that? Was getting your production drawings and conditions signed off and all that type of stuff?
Well, what we did is it had a planning consent in place when we bought it, and we were basically submitting a new plan, but obviously the mass and scale was the same, so we were confident we'd get the plan in it. You know, it wasn't an issue, so that's kind of why we bought it. I think the problem was in terms of the financing. We'd owned it for 6 months before we started building, and there's just the cost of financing, the interest on the development loan. Yeah. And what turned out to be more important for us was the time that we had for the development loan. Now, had everything else gone smoothly, that would have all been fine, and that's kind of what we expected. We didn't realise COVID was just around the corner, and that really kicked us in the nuts on this site. But that's life, you know. You can't. If you could have seen the future and you knew what was going to happen, then you'd make a lot of different choices. I guess. Especially large capital investments. And
it has been a crazy few years.
Yeah, I think so. I mean, when we were buying this building, the main drama was what was happening with Brexit, and the market was a bit weird for, I guess, 6 months or a year with the whole Brexit, and but that just disappeared into insignificance once COVID came along. And, you know, if you look kind of what's happened since then, the Ukraine war kicking off, that's caused a whole load of drama. Since the Ukraine war, we had the Liz Truss mini budget, which, I mean, I lost 100 grand in that week trying to refinance something. So, you know, there's always some crazy black swan event that's not meant to happen. It just seems to be every time I'm about to do a deal, one comes along at the moment.
Well, there's always something in there.
Yeah.
Okay, so anyway, so that one, but that all worked out all right in the end.
Yeah, but it was an absolute pain. So we were, I guess the peak of the stress was that we couldn't get the materials we wanted due to COVID. We were importing tiles from Italy and things from Germany, and it was just all shut down. I mean, at one point you couldn't even get plaster and plasterboard. You know, we were sending wagons over to Liverpool because, you know, we'd heard there was a pallet at the docks, and it was like, right, whatever we can do to get it type scenario. We went from having maybe 40 people on site down to 4. You had the health and safety executive, because we're on such a prominent site, the health and safety executive popping round, making sure that everyone's wearing masks and socially distancing whilst at work. You know, it was just very, very slow and painful, and therefore expensive. That meant that we ran out, our time on our development finance came to an end, and we had to refinance. God knows.
With an extender loan or with a new lender?
No, with a new lender. So the bank basically were like, we've had you 2 years now. We want our money back. You need to now start servicing the debt monthly. Now, at that point, I think we were about £6.5 million. So that worked out just under £40,000 a month we were having to fund, which the first month was okay, but the second month started to get a little bit emotional. Then we had an amazing bit of fortune. I saw a LinkedIn post, and United Trust Bank had actually allocated some funds under a CBILS scheme. And so I was able to rapidly refinance the whole development.
Is that what you did? Did it with UTB, did you?
Yeah, UTB, yeah.
I've got them on one of my current ones, actually.
Really good. I mean, it was part of the CBILS scheme, and we'd have gone under without that. What made it really stressful was our debt level was higher than the maximum you could borrow under the scheme. So it was capped at £5 million, and we had a £6.5 million out. That meant that I had to get 2 sales completed, done and dusted to pay the debt down so we could refinance. So I ended up in this awful situation where I'm trying to nurture 2 sales over the line as fast as I can. I've got Aldermore Bank jumping up and down wanting their money back. I've got UTB saying we can only lend 5 million and we've only got a 40 million allocation. If you don't draw the money down soon, we're going to give it to somebody else. And I knew that if I didn't get it all together, we'd probably go bust. So it was stressful, and but we got there in the end. So it was, it was.
Very good.
Hopefully some of that won't happen again to me.
Yeah, well, you'll see.
Exactly.
Just a quick word to say thank you to our sponsors, LandTech, creators of Land Insight, which is the industry-leading bit of software to help developers find and analyse the potential of real 100% off-market development opportunities. I've been involved in the business for over 10 years now, and if you don't know what it basically does what people like me used to have to do the old-fashioned way, which is hunt around and get together all of the key information that's needed in order to make sensible decisions on the development potential of land. So that's planning data, market research, lists of all of the various constraints, environment and agency information, you name it, massive long list of all of the stuff that you need in order to find out who owns land, what policy constraints there might be, and exactly what you may or may not be able to do with it. All of the industry leading developers use it, and also the most clued up smaller ones. So if you're not already using it and you want to trial for yourself, have a look in the show notes. You'll find a link to get a free trial, test it for yourself, see what you think, and hopefully get busy finding real off-market development opportunities. So thanks again to our show sponsors, LandTech, and let's get back to the show.
So then I guess it was towards the end of that, sort of during that, it was towards the end of that phase that obviously we met sort of on your first GSD stuff.
Yeah. Okay. So anyway, you got out of that one, all right. So that's good. Then what started happening?
Well, then fortune favours the brave, don't be deterred. And so I've just carried on the same, really. So I changed tact a little bit, and I guess the game-changing thing for me was moving to just solely doing off-market deals, approaching landowners directly. And I'm quite good at that front-end sort of negotiation of the site, building rapport with the landowners.
Obviously, that's where psychology comes in,
Yeah, and and sales, and just explaining the process to people and giving people the confidence that you can do what you do. So I quite enjoy that front end side of it. And so basically, I'm doing deals now. Basically, we've got a little business. We still do the buy to let stuff. We're still sort of refurbing properties. We still manage a few properties actually, but I spend most of my time working on the bigger deals. And really, the concept is that anything that I want to build out, I'm looking to build out and retain in my own portfolio. So we've just recently finished a great little deal, to be honest. It was an 8,000 square foot retail unit, and we converted it, split the shop on the ground floor into two, and then did 5 apartments on the upper floors. So we used Class MA PD for the upper floors. There was full planning for the shops. But I've taken a complete defunct retail unit, and I think we're getting just over 110 grand a year rent on that now. So that's the sort of thing that I can keep hold of in the portfolio, and that's kind of what I'm building now is sort of better quality investment stock, and it's almost like use the skills of a developer to create your own investments. I think you go through so much pain and suffering actually doing a deal. Selling it to make your 20-25% doesn't seem worth it to me now. So the things that I build out, I tend to hold on to. Everything else that we're doing is much more either on a promotion agreement, which is where we take it through negotiate the deal, take it through planning, and then sell it on to a builder at the end who do the construction and the sales. And typically you can make sort of 25-30% of the land value doing that. So that's great. And they take typically maybe 12, 18 months, 2 years to get through. So it's sort of phasing the income in your business. Where that's not an opportunity or the sites are too big, I literally just act as an introducer. So introduce the sites to developers and companies. So it's sort of mixing it all up really. And that way, I think there's 2 ways you can operate in this business. You can either pick a strategy that inside and out, and you can replicate that up and down the whole country, whether that's drive-throughs or EV charging's popular at the moment, or student, purpose-built student accommodation. I've chosen work in an area, and any way that I can make a deal stack, I'll do multiple things. So I'm buying hotels, I'm buying care homes, I've got land in Greenbelt that's strategic, that we're promoting through the local plan. We're looking at offices, we're looking at shops, and it's a whole range of stuff. We will look at buildings in conservation areas. I'll look at buildings that are listed even, although not that excited by them. And so it's a case of working out, setting your stall out, and then just replicating it through and through, and not getting deterred by a mishap. Because
so what in order to be able to get the best deals done, whether you're building stuff or trading stuff, obviously it all comes, you've got to find the right deals in the first place. What would you say are the key skills, stuff you need to know, stuff you need to be good at?
Yeah, well, I guess from the stuff you need to know and need to be good at, I think property development is so complicated that you need to be literally world class at one aspect of it. And you can't do it all, so you've got to be able to build a team, but make sure you're really good at one part of it. So I think some people are really good at the construction, and that's what they like to do. So it's okay for them to outsource all the other stuff. Me, I like the deal and the planning at the front end. So I like negotiating the deal, the contract, and making sure the planning's right. And then I outsource or contract manage or whatever the back end of it. So I think the key skill is being able to build a team, and then making sure that you can control and understand what's going on at each phase of it. So you need to know the whole thing, but you don't need to be able to do the whole thing. I think that's the key thing. The other thing is finance and money. So it does not matter how rich you are, you will run out of money in this game. I think now we've got hundreds of thousands of pounds out in various planning applications that are waiting determination, or deals that are stalled for one reason or another, and it is just very cash hungry. So your ability to market and sell yourself and raise funds is key, because the banks won't give you the money you need. You need to find that initial chunk of equity, or hurt money, or the complete risk money. So being able to sort of form relationships with people and partner with people is really key in this business. The good news is property does well, generally over the medium to long term. So there's lots of investors out there that kind of want to be involved in this market. So I've never really struggled raising funds, but I know a lot of people do.
Yeah, but it's interesting. I'll tell you what I notice. There are people out there that just get focused on the money, and even they talk about brand. Make themselves look really good. They polish themselves up. They get really good at chatting people up and getting the money. But actually, they don't really understand any of the first bit. They can't actually find the right deals or deliver.
Yeah, and you see loads of people going bust all the time, and you see loads of investors losing the money.
Yeah.
So exactly. it's a really, really risky business, I think, to some extent.
Two questions. How do you convince investors to invest in you?
Yeah.
And actually, how do you get the knowledge or experience to be able to basically? I know, right? It's about finding the right deals and knowing how to add value to them.
Yes. Yeah.
How would you do that?
So I think the first point is you've got to really understand people, and you've got to give people confidence, and you've got to be believable in what you're saying. So I started off borrowing small amounts of money. I mean, I had friends who'd have their bonus from the army after a tour, $3,000. Loan us you $3,000, I'll give you 12%, pay it back. And you do that a few times. And then we had people that had friends that got their compensation after being blown up, and it's like, well, lend us $100,000 and I'll give you your 12%. And the word gets around. So I'm very much word of mouth kind of operator. Had some family members who loaned me some money. Then we had some clients, so we bought them buy-to-let properties, and once someone's bought 5 houses, great, they've got 5 houses, they're making $1,000 a month, but they might say, well, I don't want to tie up another $100,000. Well, loan me $100,000, I'll give you 10%, 8%, 12%, depending on the deal, and you can get your $100,000 back and the interest within a year. So you start doing that, and the word gets round. I think the key thing is always pay people back. Always keep people informed if there's something that's gone wrong. So we've had delays sometimes on repayments and things like that. And I think that is something that a small business owner in property development should always be doing. And that's not really something you can delegate out, is sort of forming partnerships for that hurt money or that initial thing. Things I've done more recently have been sort of syndicated loans. So SAS Pensions they loaned on the last deal of mine, and that was a really good setup. So I'll be looking to do more with them because it's less risk per person. Everyone putting a smaller chunk in. So yeah, I think that's it. And I think having a really good story about what you've done in the past and how you've built it up, so that people realise you haven't just created this idea, done some flashy marketing, and they're trying to raise £1 million. I've got a very I've got a very believable story from a back-to-back terraced house 15 years ago to a sort of a £9 million development a couple of years ago to having several £1 million of property under management, ownership, etc.
But in terms of those bigger deals, and literally, because there's a lot of people that are into investment stuff, exactly like you were, been hammered by the Section 24, still interested in property, perhaps want to actually literally build their own portfolio, as you're talking about. How do they make that? How do they what's the best way to transition into the bigger stuff?
Well, obviously, the first thing is you need to learn about it. You need to understand what you're doing and what you're getting into, and understand the strategies that you want to follow. And that education is key. And there's lots of things out there. Do you need to go do a master's degree in property development or real estate? I don't know, but that could be one side of it. But there's also a lot of smaller companies out there that offer training courses. There's lots of networking events, and there's lots of kind of industry magazines and things to give you ideas. So I think, if I was in someone's position that was just starting out, I'd probably say, go all in, spend some money, learn about it for 6 months, a year, start trading deals so you know what an opportunity looks like, and whatever you do, just don't go out and buy the first thing you see. Try and find a job in the industry to get some experience. So obviously we were working in sort of property sourcing and agency type work. So, you kind of get the feel for it. And if I'm completely honest, the little deals are very, very similar to the bigger deals in a lot of respects on the transaction side of things. We were taking lease options on HMOs, for example, in the portfolio. Well, we do lease options now, or options on the land deals. So, there's a lot of crossover. So start small and work up, which isn't what a lot of people want to hear. A lot of people want to hear, I can get a nice flashy bit of marketing, get some ripped jeans and a Porsche, and go raise myself £1 million and do development. But I'd just be very nervous, because I think you will massively underestimate the complexities in this business and the difficulty. That's kind of my health warning that comes with being a property developer.
It does need a health warning, because it's not get rich quick, is it?
No. I'm not sure it's get rich at all, if I'm honest, at the moment. I find myself spinning lots of plates and hustling, and I think it's almost a bit addictive as well for me now. I love the chase of the deal so much that I'm quite happy to put all the money that I've made off the previous deal into the planning on the next one. So you do have to be careful. There is quite a buzz to doing deals. Be careful.
I'll tell you what, the problem with that, because that's exactly what I did for years and years and years. I mean, and a lot of people do this, increasingly bigger deals, profit from one deal becomes the equity for the next deal, and the planning for the next deals.
Yeah.
And it's like bigger, which is great, and it's all growing, until also me, 2008, I had like 5 biggish deals on the go. Shit hit the fan. 4 of them went down the pan, because they were with RBS and they pulled the plug. One of them, I'll often talk about this actually, because when banks and funders are good, they need bigging up for that. So Close Brothers were fantastic. They stuck with me, didn't pull the plug. All of the deals were good, but just RBS were run out of money, and they're arseholes. Basically, so literally all the money, all my profit, and pretty much everything I'd created in the last previous 20 years, I pretty much lost. I was almost bankrupt. So so you got to be careful.
Yeah,
I think
and that's really good. And I think that a lot of people don't do, which I have done. I was very fortunate that one of my clients happened to be a sort of a top management accountant. And she retired and then took pity on me, I think, to some extent, and offered to sort of have a look at the books and helps. And she's helped me basically build a very robust financial model now for my various companies. And I think for people that are just sort of starting out on this, having a framework and having an understanding and a few conversations with someone of that nature could be really beneficial. And just understanding how you can structure things into different companies and having different pots of money for different things is really beneficial. It's almost, once you've earned the money off your deal, it's a little bit too late. You're worth spending a little bit of money up front, getting the structure of what you're trying to do set up properly.
Yeah. So what are the what are the major problems in the business, in the industry in general, property development?
Well, I don't really want to complain and moan about the property market and the industry, because I kind of like the fact that it's imperfect and it's really difficult and it's hard and it's awful, because that means most people can't be bothered with it, and it means that when we get it right, we can make better than average returns, or what I think are better than average returns. However, having said that, sometimes you just bang your head against a brick wall when you look at it. So, I spend a lot of time speaking to landowners, and they just have very unrealistic expectations. Just very, very unrealistic in terms of what things are worth, and also what it would cost to get them to that, which is fine. That that's part of the game. But that means that you're always on the back foot anyway when you're coming as a developer. People have got this sort of impression that you're making loads of money and it must be worth more than it is, and it takes a long time to get people over that. I think then you move on to the legal side of things. So since I've started, to me it feels over the last 5-10 years that the legal industry has just like gone exponentially in terms of the bullshit that goes with it really now. And it just seems to be taking for ages to get deals over the line, and the complexity of the contracts, especially when you put third-party lending in there, the bank solicitors is basically what I'm saying. It's quite painful, that front. So you can be pretty much sick of your site by the time you've got it under contract, if I'm honest, to some extent, when it can take a long time.
Yeah, so that's interesting. I personally don't. I haven't really noticed that. The legals are what they are. Maybe it's just because you've started doing bigger and slightly more complex things where there is just more involved. I don't know.
Yeah, but potentially. I think it's just. I've definitely seen a swing towards things getting more painful, and just the information that the banks are the banks are wanting to lend, and we need I'm doing a lease at the moment. The bank have already seen the lease for the property next door that's identical. It's in the same building. But now they're wanting their solicitors to review the lease. And it's like, you've got someone in the bank who can see the heads of terms. It's the same. You know what I mean? But it's it's another 500 quid. It feels a bit like a bit of a Ponzi monopoly type setup, a bit of profiteering and fees for the boys.
There definitely is a bit of that as well.
But I suppose you sort of jump to the next stage. You then start looking at the planning. And, when we first started, we would probably get our architect to submit the planning, but now you definitely need a planning consultant, and the whole raft of consultants that have appeared that you have to get your sites over. It's just making it a lot more expensive.
To be honest, as well, though, I mean, you know what I think about this. That you should never leave an architect to try to get your planning. You know that.
Yeah,
but maybe it's
maybe smaller stuff. But my point is that I guess 10 years ago, when we were doing some quite large extensions, things like that, the architect would be quite proficient to submit that. But now, you definitely want a planning consultant to confirm it, and there'll be a whole raft of other consultants that you'd add on to that, and it just feels like the cost of getting planning is going up, and everything is either a £500 quick little bit of advice, or it's a £3,000 survey, and so it's like everything's the same. So I think people underestimate that, and the time it takes for it to be done, and for those reports to be right, and some to read them and sense check them, and it's not a small undertaking, to be honest. And that's why I've moving sort of into slightly larger schemes, because reading all those reports and surveys for a two-house scheme is exactly the same. It's a really
important thing. I don't think a lot of people realise it's almost there's nearly as much work on a small deal as there is on a bigger one, but just the numbers and the potential profit and value in the deal is much more. So if you know how to do them, you actually are better off focusing on the bigger ones.
Yeah, exactly that. And I think then it's understanding your market as well with this. So. I've realised that where I'm based up in Leeds in Yorkshire, so land values that are kind of sub £500,000, they can pretty much be bought and done by the sort of the jobbing builder, if that makes sense. The land that's kind of £2-3 million plus tends to be bought by the sort of the regional house builders, or the bigger companies that have got a specific requirement. So I'm trying to fit in that middle ground, sort of like the £500,000 to say £1.5 million, £2 million, just because that's where there's a lot of companies that don't have a land function, they don't have the agents retained and all that kind of stuff, that are hungry for sites, but they can't be building out a 5-unit scheme because it's not profitable for them. So they need sort of slightly larger sites. So that's kind of how we've set ourselves up. And the maths will be different all over the country, but that kind of works for us. And
what are sales values per foot ballparking around Leeds?
Yeah, well, it's really interesting. So it varies massively is the answer. So if we go to the south of the city, we can be down at, we can be struggling to get £200 a square foot. If you go to the north of the city, you can be 400 plus. What I've found is for what I'm doing, I'm trying to now go to the sort of the nicer spa towns, if that makes sense, and the sort of like the upmarket villages, and sort of do little deals for retaining there. And where I'm looking at a scheme at the moment, and we'll be hopefully touching sort of £600 a square foot on that, which is pretty good. Pretty good. What's really interesting is a lot of places I just can't get stuff to stack at all. So some of the old sort of mining towns and things like that, you know, it's really hard for the SME builder to get it to stack. So, but believe it or not, you know, I've just sold a site to Barrett's. You know, I was struggling to make it work, but the regional house builders were more than happy to pay good money for it.
I think that's a good thing to talk about, because remember, one of the reasons I'm doing this is so you know, people that are not literally at the coalface and don't understand perhaps the detail of all of this can start understanding, well, why, you know, how difficult it can be and why things work and why things don't work. And of course, you know, planning in general and politics is talking about, you know, doesn't want to develop on the green belt and it's got to be brownfield and the rest of it. But, you know, many people don't understand development economics, and the fact that there are, you know, massive parts of the country whereby, you know, the differential between development costs and end values is just either negative or so small that it's just not viable to build anything. So
we call that South Yorkshire.
Well, honestly, it's big parts of the country, particularly, you know, in parts of the Midlands and the North and other places as well, whereby there's plenty of sites in theory, but they're just not viable.
Yeah, exactly, and it is, you know, there's loads of land,
and it's worth actually adding and one of the reasons there is an increasing gap between the number of SME developers and bigger ones is because, you know, like you say, it didn't work for you, but it does work for Barrett's. Well, of course it works for Barrett's because they can build cheaper than anyone else, right? And that's the problem, or one of the problems.
Yeah, I completely.
For the smaller guys.
I completely agree, and that's what. And you know, when we're sort of identifying sites and sending out, you know, making approaches and stuff, we've got to look at everything, you know, because I'm operating in an area, you know, I've got young kids, family, I don't want to drive more than an hour pretty much. So I'm looking at everything around where I live, basically. And the areas that don't work for that SME sort of setup, well, they will work for the larger businesses. So, you know, I've done supermarket deals and I've done, you know, sort of large volume house builder deals, and you need to have those contacts in your armory. You know, that's the trade in business, and you know they're grateful to get the leads basically, and you know you can earn really good money doing that. You know, I've earned well over a six-figure sum on one finder's fee now, which is, you know, that really helps fund your planning applications for your own deals.
Yeah, definitely.
So making your property development business a trading business, I think, is a really good idea, because the profits that come from your trading, from developing sites, it's literally feast or famine. You know, you might be waiting a year or 2 years to get your final sort of payday, if you like, and sort of paying the bills in between can be tough.
It is, yeah, and it's worth mentioning that. So one of the biggest problems in this business is actually cash flow, because it's, you know, like you mentioned yourself, fees, consultants, all your various reports, legals, everything. You know, it's a lot of costs in order to get planning permission, and that's the thing, obviously, that adds to massive value. You know, and it's not quick. But then, you know, when it comes to the money coming back in, particularly if you're building stuff, that's definitely not quick. So it's, you know, money out, and then hopefully a good sized chunk in. If you haven't got a COVID, Brexit, RBS 2008, and who knows what next in between. So, you know, it's smoothing out the cash flow and having some income coming in as well is a really important part of surviving, you know?
I completely agree. And I think if you can align how you make your day-to-day income from your business to being within the property market, that keeps you noticed in the market. You know, so we were obviously doing agency work and sourcing deals and stuff like that. But you know, it keeps you in touch with architects, planning consultants, solicitors. You know, it keeps it going, so that when you are doing your own development for your personal self, you know, you've got the team there, and you know, people are aware of who you are and what you're doing. But I think I'd almost not recommend getting into property development until people have got another source of income coming in, because I think the barriers to entry and just the amount of money you need, even on a small, you know, even if you just want to build a couple of houses in a garden, you could easily spend 100 grand getting that through planning and doing all your site surveys, detailed design, you know, and that's quite a lot of money.
Well, I think just to, like, I mean, I've got to agree. You know, I want to. You know, I've got a business that shows people how to do this the right way, right? But knowing that's extreme for 2 houses. You know, there are cases where it could be that case.
Legal, an option fee, if you've got to pay a bit of option fee.
Well, if you do it right, it's £1, isn't it?
Well, yeah, exactly. But you know what I mean?
Yeah.
I think when you start adding it all up,
it's
and
definitely expensive.
You do your detailed design.
And it depends where it is and what it is, and the constraints and the complexities of site. Yeah. Obviously, absolutely, it could be 100 grand for 2 houses, but it could also be 25 grand.
Yes. Yeah.
Particularly if you know how it all works and you do things properly. The problem is lots of people don't, and then they end up doing it twice or 3 times, or getting refused, or never.
Yeah.
And you know what? Yeah, it is so complex. What you can't afford to be doing is doing anything wrong.
Yeah.
But it's definitely not cheap, whatever the case.
Yeah. So and the thing is, if you're trying to get into this from a standing start, it's almost too difficult. I'd say do something different. You know, I think getting a trading business, becoming a consultant at somewhere in the property development circuit is a great thing to do. And then if you want to get into it, first thing you got to do is learn it, i.e., training, do a course, read the books, meet people, and build up that network so that you're pretty clear on what you're doing. So when you actually do take the plunge and start buying your own sites and doing your own deals, you know what you're doing, because it's not something you want to learn on the job.
No.
The key thing I did, I think that was quite a good move, was partner up with people that lacked the skill set that I had. So partnering with a construction company was a really smart move, because that took a large burden off of the development process off me. So there are ways through. So I quite like the complexity that are in the industry, and the fact that it is quite hard, just because it means when you do get your deals over the line, I think it's more profitable. Yeah,
and it's obviously massively rewarding. Now, you probably don't want any more competition. I don't care anymore, and actually, I do want to help get more house builders, smaller ones, profitable and surviving and thriving and all the rest of it. So, one little tip for those people that want to grow and survive and do well in the smaller house building and SME property developer world?
Yeah, well, I guess it's just working out where you sit and what your specialty is. So a lot of the sort of the small house building companies I know, they are literally the companies that they're employing the guys on the tools, and they're physically building the properties out, and that's great. Tie in with people that can do the land function, because waiting for your sites to be planning approved and on the market, and that's not how they get the best deals. But obviously, if you've got a small business and you're finishing your site of 10 houses and the last one's been done, you need to have your next site ready to go literally the next month. Otherwise, you've got to be paying for your guys to sit at home, in effect. And so they get kind of bottlenecked in terms of not having land ready at the right time. So I'd suggest companies like that, they either need to learn how to find the sites themselves and do the planning, or they need to get a network of people that can do that for them. And that's kind of how we earn our money, by introducing sites to these sorts of people.
Yeah, I think that's definitely excellent advice, because what they don't want to be doing is buying sites with planning. And what happens, they get forced into buying. They finish the job, they haven't got anywhere else to go, they want to keep blokes employed, they don't, and what are you going to do? They end up buying stuff with planning. It's never cheap, and that's pretty much the riskiest thing you can do, and why lots of them go bust.
Yeah, I'd agree. And so what we do is we don't work on a retained basis for a lot of these guys, but we'll know half a dozen. We'll phone them up and say, when are you going to be ready for your next site? What you're looking at. And when we've got something coming through, I'll let them know, look, it's off market. You're going to be one of 3 or 4, so it's worth your time, energy, and effort to price it properly, and to put the time in to get a good, fair offer. And that's beneficial for them, because they're never not wasting the money. As soon as it's out with an agent and plastered everywhere, it's just too late, really.
And I've got to say, actually, so we've finished up on one final thing, which I think is really important, actually, and that's really land trading. Now, I a little while ago saw there was a post on Facebook, someone sort of going on about it's all wrong and blah, 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 and I sort of chipped in and said, well, look, it's fucking not. And I'll tell you for why. Like now, for example, I probably trade 80% of my sites, proper off market, add maximum planning value. I now will only build stuff if I really like it for whatever reason, right? One, I'm getting too old and I don't fancy the headaches anymore, and it just doesn't float my boat the way it used to. But I will carry on, adding maximum planning value and flipping sites. So basically trading. But the point is, that is so complicated and difficult. Not that many people are really good at it. But the pipeline still does need to be fed. We need planning permissions in order for people to build them out. Now, whether that's me or someone else, it doesn't really matter. But the thing is, lots of those little house builders, contractors, builders, they can't do it themselves because it's just such a nightmare. So actually land trading and creating ripe sites ready to go with planning permission, I think is a really important thing. And there might be people that say, oh, well, that it shouldn't work that way. Why, you're making money out of the flip and the rest of it. Well, yeah, right, it shouldn't work that way. Well, if planning was much easier and simpler, like it used to be, back in the 80s, which was the peak of SME house builders and developers, so that they could just go and do it easily for themselves, no one, there wouldn't be any money in trading land. But so until that is the case, people need to do it.
I think it's a really good service. I think it's I think it's a good part of the business to be in, that trading element, because you get to see a lot of sites and you get to know your market well and the prices well, and there is value. You are adding value to things. What I'm finding a little bit at the moment is the sites that have got permitted development, they're a little bit struggle to really charge much of a margin on for that, because permitted development is
well, you sort of know,
you know what it is.
Yeah.
So it's difficult to get a premium for that sort of stuff. But actually, little housing sites, etc. It's a great way to add value to the land and help out the smaller builders.
Very good. All right, mate. Well, look, thanks for coming. And where can people got any sites, deals, opportunities, anything up around Leeds? How do they get hold of you?
Yeah, so everyone connect with me on LinkedIn. I'm fairly active on social media. If you've got any sites, I'm more than happy to take a quick look and help out. If anyone's got any issues or dramas, particularly with the permitted development, feel free to contact me.
Okay, Dake.
Thank you very much.
Thank you. Thanks for tuning in to Inside Property Development. Please remember to like and subscribe. Do join us every week, where we'll be speaking to house builders, developers, experts, planners, and everyone involved in trying to get more much needed housing created the right way. We'll learn together how we can collaborate rather than fight, and by working together we can all help create better places, spaces and homes, and a much more beautiful world.